This time round, Senate is doing what is required by law. And we expect that whatever proclamation we make, whatever resolution we arrive at, through this constitutional process, those entities that are required to implement will do the right thing. If we make recommendations for investigation, we expect the EACC to do the right thing, because the Senate has also done the right thing by considering these matters in a timely manner. Governor Otichilo, you are the first governor to appear before this committee for the financial year 2024-2025. So I hope you're going to set the tone. You set the wrong one, and then the other 46 might also go wrong. You set the right one. We hope that others will also go right. We also take note that it's the first time you're considering financial statements prepared on accrual basis. For the last 10 years, counties have been reporting on a hybrid of cash and accrual. And so the financial statements might look slightly different. Before you came in, the reason why it took long for us to start this meeting, we should have started at 10, we were in conversation with the Public Sector Accounting Standards Board and the National Treasury on the differences between reports on accrual basis and reports on cash basis. Because if you don't do that, we'll start asking you cash basis questions. I think we are very clear in our minds right now that we'll be asking accrual basis questions. We are also very clear on the transition. We know what you expect to do in the first year, in the second year, and in the third year. We are also clear that there could be accounting issues as a result of that transition. And if they are purely accounting issues to do with compliance with the standards, we'll agree with the Auditor General to handhold you, and then we track them at the next cycle of implementation follow-up. Therefore, in as much as we have fairly long reports here, citing quite a number of issues on standards and preparation of financial statements, we want to focus more on lawfulness and effectiveness in the use of public resources. And if there are issues arising out of the transition from cash to accrual, we will get the advice of the Auditor General on how that can be worked on within the 60 days or 90-day implementation period. So, Auditor, could you tell us what the opinion was on the executive before we go to the basis of that opinion?
Thank you, Chair. Report of the Auditor General on County Executive for Vihiga for the year ended 30th June 2025. Report on financial statements was a qualified opinion.
So when it comes to the qualifying issues, what was the first basis for qualification? You may just read it and then we direct you.
One was failure to capitalize property, plant and equipment. Paragraph number 2, unsupported software license.
Let's just go procedurally. So number 1, what was the issue?
Failure to capitalize property, plant and equipment.
The substance?
The statement of financial performance statement reflects an amount of Kenya shillings 1,432,268,408 in respect of use of goods and services as disclosed in Note 8 to the financial statements. Included in the amount is expenditure of Kenya shillings 307,636,974 incurred on rehabilitation of civil works, and an expenditure of Kenya shillings 303,085,635 incurred on constructions of civil works, or amounting to Kenya shillings 610,722,609. Review of records revealed that the 2 expenditure items were of capital nature and should have been capitalized in accordance with IPSAS Nat 3 on transition to accrual basis of accounting. In the circumstances, the accuracy and fair presentation of the expenditure amounting to Kenya shillings 310,722,609 shillings and the use of goods and services could not be confirmed.
And what was the position of management, Governor?
Thank you, Chair. Chair, allow me to request my Chief Officer in charge of Finance to give a response.
Thank you, Chair. We respond as follows. The management acknowledges the auditor's observation on the above subject matter and responds as follows. During the preparation of the financial statements for the financial year 2024-2025 financial year, we relied heavily on the general guidelines on asset and liability management in the public sector from the National Treasury, that's the National Assets and Liability Management Directorate. In the guidelines, Part 4, 1E, provides that that's for accounting for non-financial assets, Section 112 gives guidance on capitalization of assets and threshold, and it sets the capitalization threshold is the value above which assets are capitalized and reported in the financial statements as non-financial assets as opposed to being expensed in the year of acquisition. The capitalization threshold should not be applied to the components of an asset, but should be applied to the value of the capital asset as a whole. All other expenditures shall be recognized as an expense in the period in which it occurred. In particular, the expenses incurred in maintenance or reinstatement of an asset that ensures that the useful operating life of the asset is attained shall be considered as operating expenses and shall not be capitalized, irrespective of the quantum of the expenses concerned. Since we are in the first year of transition to accrual basis of accounting, and as per the IPSAS 33, that's the first time adoption, we are required to recognize the financial assets and liabilities, that is current assets and liabilities, as guided by the Treasury Circular number 3 of 2025, part 2.3, and also develop policies of recognition. The county has since developed Vihiga County Assets and Liabilities Management Policy and Procedure Manual, which will guide on the capitalization and other assets management areas like identifying and revaluing, classifying of assets for them to be reported in the financial statements in the last year of transition, which is financial year 2026-2027. We submit, Honorable Chair.
So in English, are you agreeing with the Auditor General or you are disagreeing with the Auditor General?
Honorable Chair, in our interpretation, going by
are you agreeing or disagreeing with this finding?
Initially,
that
we had disagreed.
What should have been capitalized?
Initially, we had disagreed, Chair, but upon engagements with the OAG, we have reached an agreement that this adjustment should be made as a prior year adjustment in preparation of the financial year 2025-2026, so that whatever was expensed is now capitalized under PPE.
Auditor General, 610 million is above 10% of the county's overall expenditure. Because you must be clear, ni pesa imepotea ama ni maneno ya bookkeeping?
This is an issue on bookkeeping. As we told them all the assets acquired during the financial year under review, they have the historical costs, they have the documentation, so they should be captured in PPE, not expensed.
So what's your recommendation?
Our recommendation is they are made the financial statement during subsequent year on capital items that has documentation and historical costs to be capitalized and not expensed.
So we should start seeing those adjustments in the quarterly reports?
Yes.
So this is a matter that we can leave for implementation follow-up?
Yes.
Okay, members, unless there is any query, it's 610 million, auditor amesema haijapotea. It's just that imewekwa kwa bedroom instead of sitting room. Isn't that just a classification issue? Yeah, we would give you a slap on the wrist because it's a first year of transition. Yeah. But I think after a period of time, Senate will not be lenient. It's just that this is the first time you're doing this kind of transition. So we keep that in view, and as we are taking a resolution to the House, it's something that we can track in the next implementation review cycle.
And Chair, Vihiga has developed County Assets and Liabilities Management Policy and Procedure Manual. It would not be the same countrywide. It will just be unique to Vihiga. And we are saying moving forward, maybe we should have a general one that is acceptable countywide. But it's good for Vihiga for having developed this policy. We can give it to them.
Fine, we can proceed to the second matter of software licenses. For purposes of time, the OAG, we had gone through this earlier, and you had indicated that notwithstanding your findings, subsequently some supporting documentation was provided.
Yes, Chair.
Okay, just summarize what you had reported here and the current status, and then we can hear from the governor. Because if this audit was done last month, we're in January, the question would be, where were the documents in December? Why were they not provided in December and they're now being provided in January? Unless they were being, which word did you use?
I asked Kiwit to talk about cooked, something cooked.
Unless they were being cooked. Okay, fine. OAG?
We are saying on summary, Kenya shillings 3,200,040 shillings incurred on software license renewal revealed that key supporting relevant documents were missing and lack of valid contract agreement to support the expenditure incurred on software license renewal.
There was also a direct procurement authority that was required. Your second last paragraph.
Yes, further, there was no documentary evidence to show that the management reported the direct procurement to the authority within 14 days after the notification of the award of the contract, since the value exceeded 500,000 and there was no approval by the accounting officer for use of direct procurement method, contrary to Regulation 91 of Public Procurement and Asset Disposal Regulations 2010, which provides that an accounting officer shall, within 14 days after the notification of the award of the contract, report any direct procurement of a value exceeding 500,000 to the authority in a format provided by the authority.
So, OAG, since we have the written response here, which is fairly detailed, and the county are pointing us to Appendix 2 with a need assessment report, extract of PPRA report, user points, and license renewal contract agreement. Have you reviewed those documents, and do they satisfy the questions that you had asked at the time of audit?
Yes, I've reviewed them, and they have responded to the issue, because the issue key here was failure to provide documents at the time of the audit.
Governor, why did this matter have to come to the Senate if the records were available at that point in time?
Thank you, Chair. I think I would like to ask the Director of Procurement to give her details on probably why these were not submitted to the auditor at the right time.
And Director, with due respect to time, restrict yourself to that which the governor has asked you to do. Why they were not provided at the time of audit.
Thank you, Chair. I can confirm the documents were provided in good time, but you realize when the queries are raised in the draft report.
So you disagree with the Auditor General?
I can confirm the documents were sent via email to the Auditor General.
What is your definition of good time?
They were sent to the Auditor General.
On?
During the response to draft responses.
Specifically on which date?
I cannot be knowing the date.
We don't deal with terms like in good time. In good time must meet, it must be defined from the timelines in the Constitution and statute. So they could have been sent on 31st of December. That is outside that's a date when they're supposed to be reporting.
Chair.
So I just want us to agree on some basics so that these matters will not recur in future. So you are saying you gave the Auditor General the documents?
Yes, Chair, before the management letter came.
Auditor General, you are being accused of being frivolous and raising issues that have already been answered.
At the time of management letter, the documents have not been provided. A DAR, a draft audit report, was also sent to the client, and the documents were not provided.
Who is saying the truth between the OAG and the county? Governor.
Chair, allow me to request the Chief Officer in charge of Finance. I think he knows more details. Let him present that to this committee.
Chair, let me clarify with your permission that this particular query was introduced at the draft certificate level. And the challenge we are normally given only 3 days, about 2 to 3 days. So I know by the time we are giving to OAG, the documents have already been transmitted from Kisumu to Nairobi for issuance of the final certificate. But later on, we engage the OAG at Kisumu and we reach
Mr. Temba, you have said something extremely dangerous. Extremely dangerous. That it was introduced at the draft certificate. Because I thought this is a continuum. That nothing will find itself at the end without having gone through that process of samples and queries and management letter, that the OAG cannot just bring a surprise at the end.
I agree. When they were on the ground, that issue was transacted. But in terms of documentation, at the draft level is where now we received the query and we went through our documents to locate these particular documents. We were able to remit to OAG and ultimately, after engagement, we agreed that the issue now is resolved. And that's where we are.
Patrick, can we? It's a very dangerous comment, which, if not managed, could give the impression that the OAG introduces things at the end of the audit process.
Chairman, it's not possible to introduce a new thing, and if that is the case, that query then must be communicated to the entity, and they are given adequate time to respond. If there is any review to an issue that was initially in the audit query, and even then in the management letter, it can only be amended in the way that information is being requested. But you cannot introduce a totally new thing at the point of a draft report. Very rarely does it happen.
Senator Ogwo?
Chairman, even where...
You see, Chair, the chief officer has also gone on record to say that during the audit,